Okay, guys, you're welcome to the YouTube channel. So, I'm gonna talk about something that most traders they fail to lay emphasis on. Most of the things you would see on YouTube basically would be mostly about strategies, which strategy is the best strategy, maybe a little bit of talk about psychology and all of that. But there is one thing about trading that if you don't pay close attention to it, no matter how good or bad a strategy is, you would find it hard to be consistent, either with your wins or with your loss. There's a way you can be consistent with your loss, and there's still a way you can be consistent with winnings on the market. So there's one thing that most people don't lay emphasis on, and I just thought to tell you guys to show you one major secret that will change your perspective about the forex market. Okay, so in this video, I want to implore you to ensure that you watch from the beginning to the end, and I assure you you would have value for your time. Okay, so I'll be talking basically on risk to reward and win rate in the market, or with regards trading the FX market. Okay, now are you aware? I'm going to start this way. Are you aware that if you've back tested your strategy, let's say you've taken 10 trades, and for every 10 trades that you take, you discover that you win 5 trades and you lose 5 trades, are you aware that even with such poor win rates, you can still be very much profitable in the market? I know this might sound very strange to some persons, especially newbies, but that's just the reality of it. And why is that possible? It's possible that you win 5 trades and you lose 5 trades, but you would still end up in profit because of your risk to reward ratio. And that is why the OGs know in this my YouTube channel that I basically concentrate more on a risk to reward ratio of 1 is to 2, minimally 1 is to 2. If I have anything above 1 is to 2, I take it and I'm happy. But what I target basically is 1 is to 2. And I'm going to tell you why. Now, the strategy that I trade most of the times is the market maker model strategy, and the win rate is far above 50%, far above 50%, 15% and 50%. Okay, and if that is on the worst case scenario, no matter how bad you are as a trader, but let's just say you are an average MMXM trader, you should be able to, at least in every 10 trades, you should be able to win 5 and lose 5 at worst. Okay, you see the way I'm putting it, at worst. And if you're targeting a risk to reward ratio of 1 is to 2, that means for every 10 trades, let's do a little bit of calculation, guys. So that means for every 10 trades, you win 5 and you lose 5, right? Okay, so it simply means that if you are targeting a risk to reward ratio of 1 is to 2, using this chart that you see right here, our win rate is what? Let's just assume it's 50%, right? And if you are using a risk reward ratio of 1 is to 2, which is this right here, now the chart is showing us that we would still be profitable, as you see right here, if you're using a risk to reward ratio of 1 is to 2. So it simply means for every 5 trades that you take, right here, for every 5 trades that you take, you just lose 50%, right? So that means you lose 5. But for every 5 trades that you won, it's gonna be 5 times 2. 5 times 2, which is 10. I don't know if you're getting it. So it means whenever you win 5 trades, you should have gotten 10% of your account if you're risking just 1%. Okay. Then For your five losses, which is 1%, you're risking 1% on every trade. For that five losses, it means you lost 5%. So if you do the maths, 10 minus 5, it simply means you will still be in 5% profit. Are you seeing the logic with regards understanding risk to reward in trading? So it means no matter how bad it is, if your win ratio is 50%, your win percentage, let me put it that way for newbies to understand. If your win percentage is 50% and you're just doing a risk reward ratio of 1 is to 2, risking 1% of your account, you would surely make profit. Just as you see right here, you see what's labeled inside of your profit. If I'm risking just 1 is to 2, right here, that's what this chart is actually showing us. You see, even if we decide, even if the strategy right here, this is one beautiful thing that I love about risk to reward now. Now, even if the strategy is 40% win ratio, which means if I take 10 trades, I lose 6. That's what it simply means. If I take 10 trades, I lose 6. It simply means the win ratio, the win percentage is just 4%. That's what this means right here. So it simply means for every 10 trades that I take, you see, I'm taking my time to explain it. It means for every 10 trades that I take, I lose 6. Okay? That means the difference will just be I'm winning only 4. So even if the win ratio is just 4%, I will still be in profit, as you can see right here, labeled profit. If I'm using a risk to reward ratio of 1 is to 2. Now let's do the math if you're a little bit confused. If we are risking just 1% of our account and the win rate is just 40%, it simply means I'm losing 6 trades out of 4 trades that I would win in every 10 trades, right? So it simply means if I'm risking 1% in these 6 trades that I take, I would have lost only 6% of my account. Okay? Remember, using a risk reward ratio of 1 is to 2. But for these 4 trades that I won, it's going to be 4 times 2. Remember, we are using 1% on each of the 4 trades, and we are using a risk reward ratio of 1 is to 2, meaning for every 1% trade we risk, we make 2% profit. Are you getting the logic now? So 4 times 2 would give us 8. Do you understand now? So it means in every 10 trades, we would make 6% loss and 8% win. So if you say 8 minus 2, you would have still made 2% profit in every 10 trades that you take, even if your win rate percentage on that strategy is 40%, which is as bad as it is, as in no matter how bad, that's like, let's just assume the strategy is bad. For every 10 trades, you're losing 6 and winning 4. Can you see the power of risk to reward? It helps you have an edge over the market. So my emphasis in this video is whenever you're working on a strategy, ensure first that you're able to know the win rates and the risk to reward that will fit it. That's the only way you can be consistent with your profits. You're getting the point. So it simply means what you have to do is take 10 trades, for example, and journal them to see inside of those 10 trades, just risk 1% and see, to observe how many wins you would get inside of that 10 trades. Just journal it down and keep. Just do it over and over again so that you can ascertain the win rate percentage of that strategy. Then apply the risk to reward ratio that would fit in, which for me, I would be suggesting you go for a risk to reward ratio of 1 is to 2 minimally. Don't go below, don't trade 1 is to 1, please, I beg you. Sorry for the noises. Okay, I'm close to the airport, so that's why you're hearing the noise, so I apologize for that. So my advice is ensure that your risk to reward ratio is 1:2 minimally. Okay, if you can do 1:3, fine. But my advice is you do 1:2 so that even if your win rate on your strategy, even if the win rate on that strategy is 40%, you would still be in profit. You would only not make profit if your win percentage is 30%. That is when you start making losses, as you can see in the chart here. Are you getting it? You would only make profit even with a 30% win rate of in a strategy if you're risking 1:3, if you're targeting 1:3. That's why this place is marked profit for a 30% strategy. Do you understand now? So let me just do a brief um, interpretation of this table that you see right here. So what this simply means is that if you have a strategy that gives you 60% win rate, it means for every 10 trades that you take, you would win 6 times and lose 4 times. And you're targeting a risk reward ratio of 1:1, you would make profit. But if the win rate percentage of the strategy is 50%, it means for every 10 trades you take, you win 5, you lose 5. And you're targeting just 1:1, you won't make profit after every 10 trades. If the win percentage is 40% and you're targeting just 1:1, for every 10 trades you take, you would always end up in loss. You always end up in loss. So for a risk reward ratio of 1:2, for a risk reward ratio of 1:2, if the win percentage is 60%, for every 10 trades you take, you would make profit. If the win rate is 50%, for every 10 trades you take, you still make profit. Even if the win rate percentage is 40%, which means you lose 6, you win 4, you would still make profit. You would only make loss if the win rate is 30% and you're doing 1:2. That's when you make loss. Do you understand the logic now? Are you guys getting it? So this is why I'm highly recommending you to ensure that whatever strategy you're taking, ensure that you risk at least, you're targeting at least a risk reward ratio of 1:2, and ensure that your win percentage on that strategy is at least above 50%. Once it's above 50%, you should start seeing a drastic improvement in your trade. Are you getting it? If you're targeting a 1:3, very well for you. You would even make much more profit. If you're targeting a risk reward ratio of 1:4, better for you. But ensure one, that your strategy gives you a 50% win rate, and ensure that you're doing a 1:2, risking just 1% on each trade. You guys get the logic now? So that's all for this video. If you're yet to subscribe to this YouTube channel, do well to click on the subscription button, like this video so that the YouTube algorithm can suggest this video to other forex traders. If you have questions with regards to what I just explained, please use the comment section down there and I'll reply and respond ASAP. Thank you guys for your time. See you guys in my next video. Bye.